Hi everybody, my name is Adam Meyer. I am back with another video, and today I'm going to go over the S&P 500 and the potential targets of where price can go to next week, and also what happened this week. So it's going to be a quick review plus where we can expect price to go in the future. For educational purposes, this is no financial advice, but hopefully you get some value and possibly helps you out with your long-term goals. So let's get into it here. All right, I'm looking at the S&P 500 E-minis contract future about where we are on the daily time frame. So as you can tell, we came up above this high, and then we have these lows down here. And we can see that price was like failing to work its way higher. So like we came up here, we failed to make a higher high, we shifted down. And once we shifted down, we created some volume imbalances right here that you see in the red. And this candle right here creates a sell side imbalance, buy side inefficiency. That's why it's called SIBI. So sell side imbalance, buy side inefficiency. That's marked up from this wick to this wick here. It creates a fair value gap. And that fair value gap is basically rebalanced. And we're going to see if we can come up and hold that gap or if it wants to reject the gap. And as you can tell, price came up higher and it rejected the gap. And this body closed basically right below that area. And that's where we're seeing that rejection come in. And we can look for farther levels lower for short-term targets. So this low here and also this low here. So we are clearly in bearish order flow. Like, what can you get out of this video? If you get anything, look towards these lower lows. If price does work its way down within here, these are in clear sign and clear target. If price does want to hit there in the next few weeks, or if next week price just consolidates like right within here and then either moves up a little bit higher, maybe we just get a consolidation week and then it wakes up the following week and then it comes back down. I don't really know, but these are in clear sight within here. We also want to go down. Now we're going to do more of like a weekly review of like why price did what it did. Going down to these the 4-hour time frame, you start to see where I have the new week opening gaps marked up. So basically that's when it closes on Sunday. Closes on Friday, opens on Sunday, and it creates those gaps, and that's why we see the NWOG, new week opening gap, and you can see they act as a support and resistance on algorithmic terms, and that's basically where I trade based off of, you know what I mean? They act on draws of liquidity, they act as support and resistance, they act as magnets within the market. We all learned it from ICT. He's awesome for being able to teach this stuff, you know what I mean? But we started to trade down in the beginning of the week. It was a little bit of chop at the beginning of the week. We came up within here, and then we traded away from the volume imbalance. We didn't quite hit it. We shifted down below the NWOG, the new week opening gap, and then we trade down in here, and we create a fair value gap that's sitting up within here. So it's another SIBI that's up within here. So we're going to mark that as like a SIBI. Sell side imbalance, buy side inefficiency. Notice that 1 hour candle comes up in and trades right away from it. And that trading away is like indicating that wants to start to move lower. And then we consolidate, and then we had a nice trading day. We were looking for buys then here to take up to the new week opening gap, which it clearly met this area. And we also had this high here was taken, so we had this wick. We can even measure 50% of this wick here to get more of a detailed target on this. So that's where price reached up into within that wick. Also the new week opening gap, and price started to trade away. It traded lower within here, and then we came down below the new week opening gap again. So like, notice how we went to new week opening gap to a new week opening gap to new week opening gap, and notice the rejection on here. Notice the rejection on here. And then you go down to these lower time frames, you can still start to see more rejection from these areas. Like, this was a clear sell day. Price was clearly order flowing on the way down. It hit this area. There was buys. You could have taken buys within here after this 5-minute closure candle. I'm not going to get too into detail with that. But if you want more detail, just let me know. Throw some links in the chat, in my group chat if you want to see them. But price did work its way up higher. Fair value gap here. Came and hit the area up within there. So clear order flow to the high, then price started to break down. A failure to break this high here. Shifted down lower, came in here. Shifted down lower, and you could even enter on a breaker like this. Like I said, not financial advice. This is just what price did. Targeting these lows. Notice how it acts as support, the NWOG, and also acts as resistance when it breaks below it. And clear targets to the downside. Price comes up, drops down lower. That could have been a nice short, and then we came down even within here. And then this is just consolidation during Asia sessions, because we only trade New York morning and afternoon session. That's personally like what I trade. And then we just go from there. And now we got today. So that was last week, Tuesday, Wednesday, and we got Thursday, and then we got Friday, which is now today. Price traded up within here, did not trade anything within this. Price traded down, it came down below this low. We had SMT divergence with YM, so I'll actually bring over my other chart from my other screen, and you can see the SMT divergence we had. So when price was right here on ES, YM was up here. So this is a Dow Jones. So it was a higher high, this made a lower low, and also NASDAQ was chilling right here with the lower low. So we had a lower low, and a higher low. So that was SMT divergence. We had targets to the high for price to possibly reach up into, and that gave me confirmation to take trades within this area. So I'm going to bring up my Discord chat to where I record my trades throughout the day, and I will give you a good explanation of what happened here. So I'm going to pull this up, I'm going to bring it over onto this 1 minute chart. So this is this area. So let's get into this entire area right here. I was looking to target up into here, up above this high, and also the NWOG, which is this blue box, for a clear target. So that's why I'm going to get up into this chart here. If it pulls up, there it is. So we break our structure. So that's the whole area I was talking about. This is where my main entries were. After it breaks up above this structure, we have this high here, market structure shift, retested within here. This is the only trades that I was taking today. We're here. I didn't trade anything in the afternoon. I was taking this trade and then another trade over here. But we shift up, we trade back down, we shift up again. So this is where my main entry was. And when price traded up higher, I moved my stop loss down below this low. And this order block acted as support again, which targeted price for the short-term high to be taken. That's where I took partials. Price traded back down. You can take more partials within here. But at that point, I was 90% off my trade. I wanted it to come up higher, but the rest of it came down and hit break even. And then consolidated. I don't want to trade in anything like this. So I actually had a live stream that I recorded myself trading this with all of my emotions. I'm going to put that in the chat with my private group, and that's who sees it there. If they want to watch it, they can. But that's just for my private group chat. But anyways, price traded down, consolidated. I stepped away. I waited around this area, 10:30. I was like, okay, I'm waiting for the 10:50 to 11:10 macro to kick in, and I'm going to see where price wants to go. So when price traded down below here, I was like, okay, we're either going to trade up into here, we're going to reject here, come lower, and we can use this as a breaker to short down into the NWOG, which was down. So if we came down here, shifted down again, I was going to use this as a breaker right here to trade down to the NWOG and lower. But price did not want to do that yet. Price wanted to come higher up within here to retest the breaker to then go hit this NWOG. So like I said, these act as magnets, but you got to wait for the confirmation. So 10:50, 11:10, price shifted higher, it closed higher even on the 5 minute. So what gave me confirmation was this 5 minute bullish candle close right here. So this bullish candle close is this candle is either gonna give a wick here and come back down and give me a nice retest of some sort to short down like that, and I would have shorted within something like this to go to this NWOG, or price was going to come up, close bullish within our time frame, the 10:50 to 11:10 macro, to then continue long, which is where I had my entries within there. You can see them on the Twitter post. Let me pull this up real quick. You'll be able to see it. Boom, boom, boom. So there was the morning entry, and then here's the next entry from here to here. Those are the two entries I had today. But there's the quick explanation of what it is. There's a breaker block, so it breaks up, close on the 5 minute. You have all this confirmation. You have our draw on liquidity up within here. Then we have our retest on the breaker. Boom. Come up here, came back down. The rest of it hit break even. Closed 90% off when it got up within here. Price shifted up higher. I actually had to go do something else in my other business at the time. I usually get off after like my first few wins, and I don't like to trade after 11:10, but sometimes there is another entry, which it bought up above the NWOG. Another 5 minute closure, as you can tell, another nice 5 minute closure right here. Let's go over to it. Boom, boom, boom. Here we go. Another, I don't know what that is. Another nice 5 minute closure right here. And then the next candle gave us a retest of the NWOG. And then we targeted up higher within here. And then at that point, we had more SMT above this high with YM. So, I mean, there is a lot. If you need more information, let me know. Reach out to me. Or just like watch ICT and all his stuff. But SMT divergence from this high to this high. So, like once price ripped up above this high here, it's basically time to get out of the trade. So when it hit that high, it was right here, and that's when we were down within this order block within here. So like that's perfect time to basically be out of most of the trade. But you can see here on the 1 minute time frame that we are coming up and retesting this high here from this breaker to then go target up within here at the same time this was hitting here. And you can even add your fib extensions on if you go from this low. So you're measuring this swing down to rebalance. You're going to measure 1 standard deviation of that. It comes right up into here. All right. So that gives you 1 standard deviation. Like I said, I didn't take that trade, but that was also another opportunity. If I didn't take any trades this morning at all, if I didn't take any, and I was focused and I was ready to take a trade and it was a good confirmation, I would have taken this trade. This was an institutional order flow entry drill on a breaker block on top of an NWOG with a target here, and then that's what we were looking at. So that was that area. There was also more shorts. If you wanted to short this trade here, you have this gap within here. You can draw this gap out, and it shifted down. Once you see that bearish close, you have, so this is a buy side imbalance, sell side inefficiency, so a BISI, and then it traded down below it. Nice 5 minute candle closure. I personally like more when these next candles close and we have this breaker right within here. Let me see. So we have this breaker like right here. We shift down, we start to test it, start to test it, start to test it. This could have been another position, but it was in the lunch hour. I don't trade the lunch hour, so I was just observing. So we traded back down. We have these relative equal lows right here. As you can tell, I believe I have those marked up on this as well. These relative equal lows. It shifts down, starts to retest, starts to retest, starts to retest. Personally, like I said, it wasn't in it, but that could have been a potential position to target down. But if everything lined up with the time a little bit better and I didn't already have winning trades, I would have considered taking that trade as well. But I don't overtrade. I don't want to blow my accounts. You know what I mean? I want to be pretty consistently profitable. So like that's the entire goal of everything. It's just to be consistently profitable. You know what I'm saying? But price started to work its way down below the inverse of that gap after showing its hand, and it traded down, hit the low, and then all of this I wasn't really a whole fan of going into the afternoon. I mean, this hit here, rebalance this gap, hit this breaker, and then we have targets lower at the NWOG and also the 50% of the daily gap, and that's kind of where we closed at. There were some positions within here reached back up in, but it's kind of like a mess in my opinion. But could have traded it, but that's the overall thing. So basically the entire goal of this YouTube video was to like explain like what happened with price this week. It was an NFP day, which is a high impact news day with employment numbers and stuff like that, and how you can like play those out, because those came out at 8:30. I'm giving like possible projections just based on educational purposes. This is not a financial advice for price to possibly reach down within here, or we're going to get a consolidation and possibly reach back up into this gap before lower lows. I want to keep in mind that we have this gap here, so we got to keep this gap in mind, and then we have these lows in mind for the long-term analysis, depending on what we want to do going forward and how everything goes. Like we have banks going out of business, we have people getting sued, we have just more crap with Tesla going on. It's just so much going on. I'm just trying to stay focused. I'm not trying to get distracted. I'm just trying to learn and be like a sponge with whatever else comes in my way to help me learn how to like be a better person with trading, also as a person, as an individual, and also with business, because running a few businesses. So but overall, YouTube video, keep it going. Hope you learned some of this from it, but let me know if you want to join the chat or anything. But take it easy, guys. Peace out.